Welcome back everyone to your weekly crypto roundup, where we break down the most important developments shaping the digital asset landscape. This week, the market seemed calm on the surface, with prices holding steady and volatility appearing subdued, but major undercurrents were at play beneath that tranquility. Key inflation data and central bank commentary shifted sentiment, sparking new debates about the future of monetary policy, while institutions made bold moves into digital assets. Ivy League endowments and corporate treasuries deepened their Bitcoin commitments, signaling long-term confidence and a growing acceptance of crypto in traditional finance circles. Meanwhile, Bitcoin miners faced a notable difficulty adjustment, impacting network health and profitability, and raising questions about the sustainability of current mining operations. We'll also spotlight altcoins that outperformed the market, revealing new trends and opportunities for savvy investors. And, as always, we'll wrap up with the week's biggest headlines, ensuring you're up to speed on everything that matters. The crypto market remains tightly linked to global economic trends, and this week set the stage for what could be an explosive and unpredictable second half of the year. Let's dive into the essential events from June 10th to 16th, 2025, and see what's driving the market forward. There's a lot to unpack. Let's get started and explore the stories shaping the future of crypto. Let's kick off with Bitcoin and Ethereum, the two giants that continue to dominate the crypto landscape and set the tone for the entire market. Both traded in tight ranges this week, Bitcoin up nearly 2%, Ethereum just over 1%, reflecting a sense of cautious optimism among traders and investors, as many waited for clearer signals before making big moves. The main driver behind this hesitation? U.S. inflation data came in cooler than expected, sparking hopes for interest rate cuts and fueling speculation about the Federal Reserve's next steps. However, that initial relief was short-lived, as the Fed maintained a cautious stance, keeping markets on edge and reminding everyone that policy changes won't come easily. This back and forth in sentiment highlights just how sensitive crypto is to macroeconomic signals, with every data release and policy comment moving the needle. Despite the ongoing uncertainty, long-term holders kept accumulating, showing confidence in the fundamentals, and the market managed to hold above key support levels. Investors are now watching global economic trends as closely as crypto news, knowing that broader market forces can quickly shift the landscape. The market is coiling, waiting for the next big narrative, likely to come from the institutional sector, where large inflows could spark significant momentum. With all eyes on the horizon, the stage is set for a potential breakout that could redefine the current cycle. Now let's talk Bitcoin mining. The network saw a 3.9% difficulty drop, making it easier and more profitable for miners to secure new blocks. This adjustment offered relief after the recent halving, which squeezed margins and forced less efficient miners offline. The drop reflects a natural market process. Only the most efficient miners survive, strengthening the network. Seasonal energy costs also played a role, especially in regions like Texas. Improved profitability may reduce miner selling pressure, supporting Bitcoin's price. Some miners may power back up, potentially boosting hash rate in coming weeks. We'll be watching how this impacts the network's health and market supply. Institutional adoption of Bitcoin and digital assets hit new highs this week, signaling a pivotal moment in the evolution of the financial landscape. Brown University's endowment made headlines by investing in a spot Bitcoin ETF, a major signal from a traditionally conservative institution that's known for its careful approach to risk and long-term growth. Other top universities, including Stanford and Duke, are reportedly following suit, marking a significant shift in how digital assets are perceived by some of the world's most respected academic institutions. This wave of adoption could trigger a domino effect among other endowments and institutional investors, encouraging more to explore Bitcoin as a strategic asset. Meanwhile, MicroStrategy, now rebranded as Strategy Inc., raised fresh capital to purchase nearly 12,000 more BTC, bringing its total holdings to over 226,000 Bitcoin, further cementing its leadership in corporate crypto adoption. The company introduced innovative new metrics like BTC yield, and unveiled an ambitious plan to grow Bitcoin per share by 42% annually for the next 42 years, underscoring its long-term vision. Strategy Inc. is now positioning itself as a dedicated Bitcoin development company, not just a software firm with BTC on its balance sheet, but a true pioneer in the digital asset space. These bold moves from both academic and corporate giants show unwavering conviction in Bitcoin's long-term value and its potential to reshape the future of finance. Institutional momentum is building rapidly, and the mainstream financial world is starting to take serious notice of this accelerating trend. The smart money is here, and it's staying, setting the stage for a new era in digital asset investment. While Bitcoin and Ethereum consolidated, altcoins saw action. Toncoin surged 18% thanks to Telegram integration and new mini-apps, while Avalanche gained 12% on subnet buzz. Meme coin Pepecoin rose 10%, showing the power of community-driven assets. Coinbase secured a UAE license, expanding its global reach. The SEC delayed decisions on Ethereum ETFs, keeping markets in suspense. Solana rolled out fixes for network congestion, and the Ripple SEC case neared a key ruling. Altcoin dominance ticked up as traders rotated into higher-risk plays. Foundational shifts are happening beneath the surface. What projects are you watching? Let us know in the comments.